Hi, everyone. Thank you for coming. I am Chuin Wei. I'm Research Director for the Hinrich Foundation. I think a lot of you, when you signed up, had been expecting Deborah Elms to be in this chair. And I just want to say, try to contain your disappointment. Debbie, unfortunately, uh, she's ill, so she had to take some sick leave. So I'm stepping in on her behalf. Thankfully for me, I've got two fabulous guests to help us with our trade outlook for this year. Before we get there, I just wanted to talk a little bit about what the Heinrich Foundation is and what the Heinrich Foundation does. We are a philanthropy. We are dedicated to the mission of advancing global trade, and we do it through an education program, scholarships for trade education, as well as a research program that I oversee. I work with a lot of you in this room. There are a lot of very, very familiar faces. And we do it through thought leadership content as well as strategic partnerships with great people, including the media, as well as experts in the field on pretty much everything. Um, I should start, since this is a trade outlook, with a very brief few remarks to just say that looking at 2026, in just the first month alone, I mean, the amount of noise has been incredible. And when you screen out the noise, I think one clear lesson that we take away with us, which is going to be a reality looking ahead, is that geopolitics and geopolitically driven policy is here to stay. So market practices are no longer going to lead the way for trade policy. Geopolitics is. I think that's going to be a constant. And here to sort of elaborate on these themes and probably more is Taimur Baig. And Taimur also doesn't need very much introduction for all of you here. He's leads research for risk management, investment strategy, and
Yes.
macro econ. Thank you for DBS share price. And was formerly with the International Monetary Fund, Deutsche Bank, a whole list of hats. And Karishma, who's with Bloomberg now, formerly with BBC, reported from Mumbai, Indonesia, Asia at large, and has been a long time observer of Asia. So, Taimur, do you want to walk us through what you think 2026 is going to look like?
Sure, with pleasure. Thanks for the introduction, Chuin Wei, and good afternoon, everybody. When the reciprocal tariffs hit us, and it really hit us like a bombshell, I think I spent all of April briefing my board and my executive committee almost on a daily basis about the worst case and the worst case and the really Armageddon case scenarios. Uh, I'm done with all that because when I now look at the data for 2025, I think we can say with some degree of satisfaction that the protectionism virus that was unleashed by the US remained in the US. It did not affect the rest of the world. We have ended 2025 with global trade in goods and services rising by over 200 basis points relative to the previous decade's trend. Now, you may think that this is probably due to the fact that there was a lot of front loading of trade in anticipation of tariff in the first 3 months of 2025. You would be partially right. There was some front loading of trade, but the global economic cycle is such there was no payback. There was no contraction of trade to make up for the spike that happened in the first quarter. In fact, trade went strength to strength. So we are living through two very interesting trade related trends, which, in my view, is a very useful offset to all the protectionism and tariff related volatility that is taking place. First one is, of course, the big AI cycle. When you look at a country like Singapore or Malaysia or Vietnam, both are going through record growth in exports and record growth in FDI. And that is related to the high end electronics, chip manufacturing, data center related investments and orders. And there is no sign of that relenting. So for us sitting here in early February 2026, the outlook for trade and regional growth looks really good. I run a nowcasting model of the region, and when I look at it from the latest with the latest available data, Singapore is tracking close to 4% growth right now. Um, China is tracking high four. India is tracking 6.5. Indonesia is tracking 5-ish. And for all of those countries, we can talk about all sorts of downsides. But let me just start with that bottom line that growth momentum is great. Inflation momentum is falling. Investment in certain parts of Asia is at record territory, and exports are doing just fine. So, one driver, one offset to the protectionist virus was this AI cycle. And the second one is the China new tech. When you look at China's exports, we tend to sort of look at the top line figure and we say, well, their exports to the US are down, but their exports to the rest of the world is up. That's actually a cause for concern because they're flooding the world with cheap goods, stealing market share, the whole excess capacity argument. But when we go away from that top line data and start looking at the breakdown of what China is exporting to the rest of the world, we realize that China is going through a big transformation in the most dynamic aspects of its export sectors. 10 years ago, China was, of course, fitting that caricature usurper of Western technology, no respect for IP, flooding the world with cheap manufactured goods. That is such a yesterday narrative. Today, when we look at the most dynamic part of China's exports, it's batteries, EVs, solar panels, wind turbine related products, increasingly connectivity related products, whether the Huawei's of the world making or not, and cutting edge pharmaceutical drugs. You talk to drug manufacturers around the world, they're busy setting up deals with Chinese drug companies because the R&D pipeline out of there is without any question the most promising in the world, more than the US, more than the European pipeline. So it's not just green transition related products, but also in pharma, China is sort of going strength to strength. So that is the second driver, that over the course of the last few years, the global south in particular, but in general, overall, everywhere you go in the world, people are recognizing there are a bunch of new products coming out of China made by Chinese tech, driven by Chinese IP that we want to consume. It's a very big shift from the caricature that you hear in the West, which is stuff that China sells are stolen IP and it's just driving down the cost curve by economies of scale and trying to steal market share. It's very much an old-fashioned story. And final point on this issue, and then I'll pass the baton to Karishma, is that this trend is going to accentuate further in the coming decade. When you look at Nature, which is the top science journal in the world, and their ranking of R&D by universities, which is to me a very good predictor of what's coming down the road, top 9 of the 10 universities in the world are in China in terms of Nature's index of top tier journal publication. When you look at World Intellectual Property Organization's database where they do tech cluster analysis, you and I probably would guess Silicon Valley is number one in the world and would be wrong. The number one tech cluster in the world is the Guangzhou, Shanghai, Shenzhen corridor. Because it's not just Chinese universities producing publications, it's also Chinese commercial entrepreneurs taking those ideas and turning them into patents and creating companies which are becoming a part of that Chinese IP, Chinese brand, and so on. So to me, we should, of course, worry about geopolitics. We should worry about the redundancy of supply chain and all the things that are happening in terms of fragmentation. It's inefficient. It's not profitable for businesses. But at the same time, we're not paralyzed by it. And not just because of various smart reaction to the wave that is affecting us from the US, is because there are a bunch of secular trends taking place, which will continue independent of whether Trump is around or Trumpism is around, or there's a reversion in the US to a more ideological stance versus a transactional stance. All of those things we can game scenario plan and worry about. But the secular trends, in my view, sitting here in Singapore, are even more powerful in many aspects.
That was excellent and far more optimistic than what I'm about to tell you, I'm afraid. So I'm glad you went first because I'm going to now depress you. No, I am not entirely going to do that. Taimur has talked about money, and I'm going to talk about power. I spend most of my day looking at how these geopolitical trends are playing out in Asia. And one of the things that I think is always useful for me to do in my work is to pause and think about where we've come from in order to see where we might be going. So it does feel like a moment of heightened instability. I think, it doesn't help that every morning, or it certainly feels like that for journalists, Donald Trump is doing something spectacular and we have to react. So there's a lot of noise for sure. But this region has been through periods of heightened instability before, how Asia reacted to what happened during the Cold War, the Asian financial crises. We're no stranger to this kind of turmoil. And I've seen that in my own lifetime, growing up in Indonesia during the Suharto dictatorship and watching firsthand what that transition from dictatorship to democracy looked like. So the point there is we've had difficult times before and we have come out of it. And notwithstanding the fact that in Indonesia, we are seeing elements of that democratic reform possibly roll back rather disappointingly, for the most part, I think the region has done pretty well. But I also think that where we are right now is at a really difficult transition. And in fact, I want to borrow Mark Carney's words here, more of a rupture than a transition. And I think we're going to see the consequences of that play out in the next few years. I want to quote from something I learned a long time ago back in university as an English literature graduate, the fact that, I think Shakespeare said it, the time is out of joint. And the assumptions about alliances in American leadership, they're simply unclear right now because of the unpredictability that President Donald Trump has brought to this region in particular. It's no longer an aberration, but a structural feature of the system. So what we're seeing amongst Asian governments is a realignment of how they try and navigate. And I've seen that just in my conversations with Asian diplomats and officials. They're not looking at China as the natural partner. It has been a really important economic partner, but that's not necessarily something that they see playing out in terms of security. US security alliances continue to remain the most prominent security alliances in this region. And when countries in Asia are trying to figure out how to navigate issues like the South China Sea, it's not, naturally a partnership that they will want to form with China as a result of some of the intimidation that they're facing, like if you take the Philippines, for example. So I think what we're seeing right now is what a colleague and columnist of ours at Bloomberg Opinion likes to call the great hedge. The US has become unpredictable, and the Chinese are not necessarily the partner that everybody wants in terms of security. And what you'll end up seeing, and what I think we're already beginning to see, is middle powers being forced to come together and finding ways to cooperate. Perhaps this speaks to the trading relationships that you've been talking about as well, Taimur. And I hope that there is opportunity in that. But what I also see is defense spending going up. I see the fact that Japan no longer feels confident that in a situation where Taiwan might come under attack, the US would necessarily rise and help. And all of that lends itself to a period of instability that is making people feel far less confident about the future than they have about the past. I grew up in a region, like the most of you, I imagine, where there were open borders. There was this concept of economic opportunity, boundless enthusiasm for exports from the US like McDonald's and Coca-Cola. The idea that we too as Asians could live the great American dream. I have 2 children, teenagers. I'm not so confident about them for that kind of future. So I didn't want to totally depress you, but these are the things that I think about and that I write about. And on that note, perhaps, yeah.
Thank you, Karishma. Thank you, Taimur. And somewhere in between these two, this huge gulf, I suppose I have to sort of find a way to sort of thread the needle. I have a couple of questions. Actually, I have more than a couple of questions, but before I turn over to the floor, first couple would go to you, Taimur. When you speak of the promise of China, and in many ways, we see it. It's a different China. It's trying to restructure its export machine and the nature of its exports, going up the value chain, and being really quite innovative in a way that has never been innovative before. the export surge that we saw, end of last year across the $1 trillion mark, it poses this question that I'm about to now pose to you, which is that at the heart of it is a structural problem. Now, they are turning to exports because they can't stoke consumption and they have difficulty with investment. There's a lot of promise in what they're doing, but there's a doubling down on exports because there is no other choice. Now, that is a structural problem. Now, we can say that this is a Chinese problem. It's not exclusively a Chinese problem because on the other side of the intellectual fence is another country that saves too little, consumes too much, maybe imports too much. That's also a structural problem. But we're talking about China here. What do you think of?
So during your kind introduction, you pointed out that I worked at the IMF. So one of the things that we did back in the days in the IMF, and my colleagues who are in Washington, D.C. now, continue to do so, point this out, which is China has a chronic underconsumption problem. And the way to rebalance the economy is to come up with ways for the Chinese to consume more. So, at a macro level, it's fairly easy to make the argument. But at a micro level, when you look at, for example, Sam's Club and their incredibly profitable franchise in China, when you look at McDonald's and Starbucks and all these Western brands that the Chinese love to consume, when you look at the growth of Luckin Coffee or all these hot pot chains, which are now going all over Singapore as well, China is actually going through a pretty powerful consumption growth narrative. It is growing in real terms, substantially, mid-single digit, maybe not growing the way we would like it to grow. But from the Chinese policymakers' perspective, given the fact that they've had a huge property buzz, given the fact that the household in China are sort of looking at their balance sheet with some degree of concern, the current pace of consumption, in my view at least, looks quite fine and sustainable. China certainly has an overinvestment problem. So we tend to think about an identity savings investment balance, and we say that if a country overinvests, then it saves too little, or there's way too much saving going on, then it'll go into unproductive areas. That certainly is the case. China certainly invests too much. It is not one side of the coin and the other side of the coin. Just because you invest a lot domestically doesn't mean the flip side of that has to be by tautology. You need to consume more to balance that. You can invest in the rest of the world. You can deploy your savings in more productive ways. It doesn't have to be in the next bridge and the next train station. So to me, I've sort of gone through a bit of a revision in my take on this issue on China. 10 years ago, if you asked me this, I would have given you the IMF cookie cutter answer. They got to spend more at the consumer level. They have to give the consumers more incentive. And that would be, as a flip side, reduce investment, make the economy more balanced. Having looked at China somewhat more closely now that I live in Singapore and not in Washington, I've sort of gone through a bit of a shift in this issue. I want to touch on something Karishma was saying. And I think it troubles you that it seems like there's a big gulf between her concerns on the power dynamic and my relative comfort on the money dynamic. I think that in the first Trump term, the view was that if you squeeze China economically, you actually will extract more power away from China. And I think having had 4 years of Trump, 4 years of Biden, and now year 2 of Trump 2.0, we can safely say that that hasn't quite worked out. That it is not the case that squeezing China economically somehow makes the US more powerful. And then for the rest of the world, doing business with China is profitable, but that comes with a great amount of risk because the Americans will be upset, and therefore it's an either or. Allow me to entertain a midpoint. India. Terrible tension on the border with China. And Indian military, you talk to anybody who serves in the Indian military, current or past, they would tell you how disappointed or upset they are with China's repeated harassment of India's military across the border. I think India has shifted from the position where that issue makes it impossible for them to do business with China to a position where that issue is deep. It will take a very long time to sort it out, but you cannot let that get in the way of doing business. 3 years ago, I work at DBS. I have Chinese citizen colleagues who couldn't get a visa to India to go for work. I would talk to my institutional banking clients like Huawei, Oppo. They would say that, we did all this FDI in India. We can't even send an engineer to India anymore. That is 2022, 2023. Everything has changed today. Visa to India is not a problem. Daily flights between India and China have resumed. And India, in my view, is beginning to write a playbook that the Europeans and countries in ASEAN can follow. And the playbook is exemplified by one example, which is MG cars. MG is a historically British brand, but it's not. It's made by Shanghai Auto. How is it that there are thousands and thousands of MGs on the streets of Delhi and Mumbai when you go there? It's because India, through JSW, got a 50-50 partnership with Shanghai Auto. So today, MG cars are assembled in India under a full tech transfer and 50-50 ownership, and it's been a big win-win China-India outcome. I think that large markets like Indonesia, like European Union, like Brazil should follow this playbook, and that's where you perhaps, just perhaps, merge the two.
Yeah, I would totally agree with that. And I think that is an example of the whole concept of middle powers being forced to come together. Having said that, I think what India is doing is precisely an example of how you can compete, cooperate, and align with China, but continue to be suspicious, right? And they have had to boost military defenses at the Arunachal Pradesh border. They're under no illusions that maps consistently are being changed, and the tensions could spark up at any time. But conversely, the U.S. Operating in the way that it has under Trump 2.0 has in fact pushed countries to find this solution. And you never hear about the Quad anymore. You never hear about those kinds of initiatives that during the Biden administration were meant to serve as a bulwark against China in the Indo-Pacific. And I think what the consequences of that are, and they are destabilizing. I'm interested to see what you think about what the impact is on the economy and on these economies in the long term. But if countries are continuing to raise defense spending, they are putting more of their sort of political minds and thinking towards an environment where at any point they're concerned about some kind of conflict breaking out, whether it's by accident in the South China Sea or in the Taiwan Strait. What does that do to confidence? I know you talked about consumer confidence in China or consumption, but even social indicators to me tell a different story. People don't want to have children. I know this is a global issue, but people aren't getting married. To me, that says they're not confident about their own country's future because they are concerned about the economy going forward. So those are the sort of trends that I'm looking at. Yeah.
Taimur, I think there are a few questions for you in there rather than me. I don't know. I'm not entirely sure why you're looking at me. But,
Okay, no, but I just want to give you the floor. I mean, I can sort of, we can go back and forth. Yes, I'm with the journalist on my right hand side. So
well, I'm a former journalist too, so I'm sorry, you're pincered here. So I think Karishma raises very very relevant points because you speak of the micro level, and absolutely, I think you're right. When you look at the micro level, the paces the pace of growth. I mean, as you correctly pointed out, when you look at the overall trade numbers from last year, I think it's a record 7.3%. And I think you correctly pointed out India's growth projection, IMF 6%, which is the highest in the world, followed by China, I think, right? So right. So on that level, there's this sort of silver lining. But I think what Karishma is talking about is something much more subtextual, and it has to do with the rules that underpin this certainty, and that's the part where, like, I think a lot of people in this room, that's why they're here. India's role, in particular, and this concord that you sort of point to, I think Karishma sort of flex at this as well. It masks they're fundamentally at odds in many ways structurally, and more than that, you see it manifested, for example, at the multilateral level for me anyway, because it's just trade, that we do here, at the WTO, where China is not actually a an obstructionist. It's been quite cooperative. It's interested in new rules. It wants is at the committees. It shows up. It participates. India has been a consistent blocker. Doesn't want any new digital rules. That doesn't want agricultural subsidies to be resolved. Everything is claims its mantle as a leader of the global South, and therefore says no to everything. So we see that on the trade front, and Karishma sees it from a geopolitical front. Somewhere in there is a tension that isn't being addressed.
I just want to clarify, because I do agree with Taimur more than perhaps I have indicated. But the nub of what I'm asking, or I'm interested, I would love for there to be a situation, and maybe it is naive of me to think that this is not the case, where countries and companies can sort of ignore this stuff and then be like, you know what, we're just going to trade and we're going to do business and we're going to make money, and it doesn't matter if our governments are increasing more defense spending or they're concerned about the South China Sea. And if that's what the data is saying, then that tells us a very good pragmatic sort of scenario for how these companies and countries are operating.
Look, companies around the world want to get along with their cross-border partners. So when I go to Washington, D.C., I cannot find a single person who's friends with China, Democrat, Republicans alike. When I go to Wall Street, other than the exception of like Howard Lutnick, just about all of Wall Street is very, very long China. They want to invest with China and they want to do things with China. Silicon Valley is weird. Some of them want to pour all their brilliant talent into defense tech to attack China, but then there are others who want to take advantage of the Chinese scientists to do the next generation of tech finding. Let's extend that to our part of the world. When you go to Korea, when you go to Japan, those countries' corporate CEOs are so extended to the US. So think about a company like Hyundai, 30% of their global profits come from the US. They beg their presidents and prime minister just to say yes to anything Trump wants them to do. Similarly, in the case in India, for the longest time, the government of India sort of held back Indian corporate sector. The Indian corporate sector was very much in favor of RCEP. They were not worried about China flooding India with cheap goods. They were like ready to do the tech transfer and do the deals. But the government of India said, no way will we do RCEP, because that would be a backdoor way of China to come in. I think there are increasing number of voices, not just in Indian opposition, but also in the Indian government, who now say that was a big strategic misstep. That you, of course, have to be suspicious about a country with whom you have gone to wars with and with whom you have unsettled border issues. But if that country happens to be the source of technology that you want to consume and has certain things that you want to be part of, do you really shy away from that? Because that might be a pretty spectacular own goal. My initial reaction when the EU-India trade deal was announced, and I have a funny anecdote to share about that, was that what is really important for India is to do something similar with ASEAN. Because we are, in this part of the world, living in a United States of Asia, so to speak. Every electronics product that you and I hold, it's not made anywhere. It may say made in China, it may say made in Vietnam. It's made with parts in like 6 different countries in Asia, and they move back and forth all the time. There are wafer manufacturers right by Changi Airport who are now running 24/7 shifts because there's so much demand from Taiwan that they produce the wafers on a Monday, Tuesday, have it tested and packaged on Wednesday, Thursday, and Friday there are DHL planes waiting to take them, and by Sunday night, TSMC starts making chips out of them. The story that I want to share was, I think some of you in this room know James Crabtree. He was based here for a few years, ex-FT journalist. So James ran into some of the EU trade delegation people who were about to leave India, and he said that they all had like PTSD on their faces, because dealing with Piyush Goyal in trade negotiation will reduce your life expectancy by a few years.
I heard.
Yes. So I think that, but look at the kinds of people. I'm sure you have similar experience that I do. The kinds of people we meet on the corridors of Singapore today. I meet with European security firms who are looking for private credit or private equity investments out of Asia into defense tech. I meet with private bank officials who are bringing their clients from Zurich or Monaco to Singapore to think about a second family office. So, and all of this is to a large extent predicated by the geopolitical developments, the war in Ukraine, the weaponization of the dollar by the US. All of those things are galvanizing businesses. You're right. They would much rather have a set of predictable rules and just go on with it. That doesn't happen, of course. They're all lobbying very hard. And if it doesn't work with their own government, they call up DC and try to get a meeting with Eric Trump.
All right, just one very last question before I take questions from the floor for Taimur and Karishma. And this relates to something that Karishma raised, and we had commissioned Oxford Economics to do a report for us on FDI early this year. We published it at the start of this year using FDI data. Of course, this is preliminary data because, I mean, as you know, real FDI data comes much later. To take a snapshot of April to September FDI within Asia and see how the policies of the past year have affected FDI. And the findings were, not very surprising in some ways. Everybody lost. I mean, the global average decline in inbound FDI, global average was minus 31%. North America took the hardest hit, it was minus 59%. Asia lost the least, minus 12%, which explains a lot of what you're talking about. Having said that, and the hotspots that emerged as the destinations for this new reshaping of Asia's FDI landscape was VIMI, Vietnam, India, Indonesia, Malaysia. Again, countries that you raised. However, and I think Karishma alluded to this, in Indonesia, there's a great deal of chaos.
I was there during the 2 days when the stock market fell by 15%.
Yeah, exactly. And for the first time, an outflow of an already shallow equities market. So, and in Vietnam, maybe a lesser profile reshaping is underway. I mean, that there's a consolidation there that is bringing a huge degree of uncertainty into the markets. Somewhere in there, in your prognosis, do you factor that in?
I was talking to the IMF's representative in Vietnam, and he was telling me that the oligarchs in Vietnam are very upset because they felt that they used to get the best deals, and now they realize that Eric Trump gets the best deals in Vietnam. So, in one way, a lot of countries in Southeast Asia or even North Asia find it easier to deal with a very transactional US because, it's just a question of bribe. And how much money do you want to give them for them to do what you want them to do or take the pressure away from your government, right? And the Vietnamese, I think, they thought they were ahead of everybody else in the bribe race, that they will bribe Eric so much that the US will just take it easy with Vietnam. And they proved to be wrong, right? They had a working level deal done. As they were flying back to Vietnam, they realized that Trump had changed the terms of the deal. So I think that there are massive problems of governance. There's a huge amount of heterogeneity. And I fully concur with Karishma that I'm very worried about the backsliding of institutional strength in Indonesia. In a way, it's like a tragedy foretold. Ever since Prabowo's star started to rise, you could tell that if he gets elected, things will go south. And that's exactly what's happened. Very, very predictable. So I do worry that, forget about even North Asia, China, just within Southeast Asia, we're about to have three sort of fragmenting cohorts. One is a bunch of failed states, Myanmar and Cambodia, and, well, I hope not Cambodia, but looking bad, and Laos. And then a couple of countries that had a lot of promise, but just middling, sometimes lurching toward crisis, sometimes not, but populism and poor institutional slide. I mean, put Philippines and Indonesia in that cohort. And then you've got the three bright stars, basically, Malaysia, Singapore, and Vietnam, regardless of what's happening with geopolitics, just hitting it out of the ballpark in terms of attracting investment and just riding the whole tech cycle. So that sort of fragmentation is worrisome because sometimes the bad stuff can spill over to the good areas. Good areas fairly seldom spill over to the bad areas, unfortunately. It's just the way the world works. So that's a source of worry. But it's kind of amazing that the top end of the spectrum, those three countries that I mentioned, Singapore, Vietnam, Malaysia, are really going through a proverbial golden age of investment. I think by the time the 2025 FDI data comes up for the fourth quarter, we'll see 25 to be a record for these three countries in terms of annual FDI, which will be a record built on the 2024, which was a record itself. So it's very dispersed. Some countries are doing very well. Singapore is doing exceptionally well, and then some are not doing well at all.
But there are other changes. For example, for the first time ever, you see China overtaking Korea plus Japan combined as the top originator of outbound FDI, whereas inbound FDI into China has collapsed. I mean, that part everybody knows. But the originator of the FDI is changing, and that is going to change. And the challenge that it poses to incumbents is also going to change the picture. But I should stop bleating
Just one thought
yeah.
on what Taimur said in terms of the region. I think it is really important while we look at FDI and we look at where the investment is coming from, to also think a bit about the kinds of people that aren't in this room and the ones that were protesting on the streets of Jakarta or around the country. And, you know, what are we talking about when we're actually saying a country is doing well? Because for that country to do well, people need to have jobs. There needs to be political stability, because those kinds of movements can topple governments, as we've seen in Indonesia before, as I was talking about in my opening remarks. And I think that's the thing, you know, when we talk about authoritarianism, the whole idea of liberal democracy is a fairly new experiment for the world, not just Southeast Asia or Asia, right? I mean, if you look at the region, Taiwan is the only standout real democracy right now, and it's under so much threat. So I think we're comfortable with economies operating under authoritarian structures, but the issue with that is that you get corruption, you get lack of governance, you get lack of transparency, and as a result, the creamy layer on the top always makes the money. But the people at the bottom, and you know, there's self-interest in this. It's not just a sort of hand on heart, I'm worried about the man on the street. That leads to a degree of instability that then can make it very difficult for businesses to operate.
Yeah, that creamy layer in Indonesia has just had an area the size of Switzerland taken from them and given to another creamy layer. So anyone here
I
has
hope everybody got that.
Jared's got a question for us.
Oh, sorry. Okay, great. So just a quick comment or two and a quick question. So, Taimur, I totally agree with you that the old story in China is old, and the sort of, you know, stealing IP, low-end manufacturing, flooding the zone. I guess the sense I'm getting from listening and talking to people is that even the policymakers in the U.S. do kind of get that. It's less about the old story in China, and it's about the fear of China's newfound capabilities, right? Now, the solutions seem to be still being driven by a 2012 idea of how to stop China, but I think the fear that's driving a lot of this policy approach to China is because of this realization that China's capabilities are enormous. And I guess the question embedded in there, if anyone could possibly answer that in a place as diverse as Asia, is how does everybody else feel about that? My sense is that a lot of countries are uncomfortable with China's capabilities, but the question is it seen on balance as mostly an opportunity from an economic perspective, for instance, or is it seen mostly as a threat from a geopolitical strategic perspective? And that's going to vary from country to country. And that gets me to my question about the sort of middle power point that we're making. Everybody's talking about how the US kind of retrenching or going crazy or whatever's happening there is creating these opportunities for middle powers to come together. But even in this room, we've talked kind of ad nauseum about like the challenges of actually getting these countries coming together, especially in the absence of some sort of rules-based system like the WTO or whatever. And I guess my question there is anybody thinking about what the sort of institutional arrangement for a middle power response to this would look like? Because I'm going to say something that's basically blasphemous in this part of the world, but I think ASEAN does not serve the interests of Southeast Asians very well. It seems to me like based on that three-part fragmentation in Southeast Asia right there, there could be much more sensible alignments between some of those bright countries, middling powers, and then some of the bigger peripheral economies, North Asia and South Asia, that might make more of a sense. But my concern is that rather than driving countries together, there's more of a drawbridges up, batten down the hatches, we're going to go it alone in the absence of institutions.
I'll answer the geopol and then yeah. So I think it's instructive to look at a couple of surveys that came out in the region, which I'm sure many people already know from the ISEAS about the state of Southeast Asia, both 24 and 25, I think. And there was a really interesting flip between where countries felt, which superpower countries felt more comfortable with between the US and China. And the predominant reason why countries changed their allegiance to China and felt more comfortable with China, you will be surprised. It wasn't because of the upending of the rules-based order, and fair enough, the survey had not, was asked at a time that this hadn't sort of really come into the full display. It was Gaza. Malaysia, Indonesia, and even Singapore were very people who were asked, questions about how they felt about the U.S. were really upset with what they were. And these are young people. They're getting social media pictures of people in Gaza, children being killed, and I think the double standards that they saw that made it no longer a Muslim issue, which it has been in the past, but it's become a human issue. And it was an illustration of the fact that when the United States says it stands up for human rights, as it has in the past, it's only about human rights as long as it adheres to what's convenient to the United States. Now, in a way, Donald Trump has taken the curtain off that for us. We can kind of see right into the room about how, US policy is made. And I think that degree of trust. I mean, I believe in the American system. I really hope it corrects itself. But for now, I feel like the geopolitical consideration for a lot of people, and these surveys are obviously not representative of an entire region of 600 million people, but I think that reflects or helps to illustrate some of what the sentiment is on the ground. Notwithstanding the fact that people are also very concerned about the South China Sea, and they see that as a real issue from China.
In terms of what is the non-hegemon inspired structure that can allow countries to find some degree of alignment on rules of engagement, we may be dismissive about the WTO, but the WTO's legacy, I think, will live on. So whenever there's a trade agreement written, it's written by people who are steeped into the understanding of how WTO works. So when we look at EU-India trade deal, it was not like it was discussed in a vacuum. It was very much influenced by the way FTAs in the past have been signed under the aegis of WTO rules and regulations. Similarly, RCEP, the document to me looks like a very standard, straightforward, chapter by chapter discourse on the kinds of thing a WTO inspired document would do. So to me, the multilateral organizations that are out there that were like the Bretton Woods post Second World War era organizations, they may be defanged. Maybe they were never entirely independent. I think we can all be pretty certain about that. But they have provided certain public goods in terms of, how to think about flows of funds, the IMF, how to think about development, the World Bank, how to think about trade, the WTO, and for better or for worse, how to think about security, the UN. So whether or not we like the organization's track record, I think most of us will have some degree of disappointment with all these organizations. But I think their legacy in terms of helping countries who want to do bilateral deals or set up a regional deal, I think the rules of games are there in place. So that would be my one take on this. And I would also argue that pre-Bretton Woods era, so if you look at the 18th century or even the 19th century early part, the world of trade was fairly free. Countries did enter into each other with agreements, and tariffs actually were used sporadically in some places. US was always a very big lover of tariff in the 19th century, peaking with McKinley in the late 1890s. And then, of course, it sort of came back in a disastrous manner during Smoot-Hawley. But by and large, around the world, even the colonial projects, so if you think about the Dutch East India Company or the East India Company of the Brits, they were all about setting up free trade and that sort of stuff, right? So to me, that gene of coming up with ways to have frictionless trade and commerce, a win-win narrative, it's there. It's not going to get killed by the Trump virus.
You okay with that, Jared? All right. Yeah, go ahead.
Well, I have been to China for 20 years. So I think I can speak a bit more about the people of China. But before that, I have 20 years of experience with top MNCs. So I have this corporate mindset. I go to China. Yeah, it's very tough. But one thing I know is that the Chinese, there is a saying, there is no forever enemies. There's only common interest. I think Trump today is the same thing. If you see there are good common interests, he will throw away the enemy part. It could be even a good friend with the Korean president, not Korean president, or even presidency. So what we are doing, our International Zhenhe Society, we are kind of NGO. So we always believe that government is there to give us a structure, a way to work on it, but they are normally not the best working partner. The best working partner will be business to business, direct to the people, build up the trust with each other, and then we start to do business. We do cultural exchange, cultural tourism, but we are also at this moment going to Sri Lanka to talk about the history of Buddhism. We're not telling people to be a Buddhist. We are talking about Buddhism in Sri Lanka have 2,000 years of history, something very interesting for ecologists, people are interested in culture to understand more of it. And hopefully we have a more peaceful world. I don't have question.
Thank you. Was there? You guys want to respond to that?
That was a really lovely reflection about your time in China. And I do believe in this idea of common interests. I think that that is the very transactional nature of doing business. But one thing, I'm often asked, is China trying to remake the world in its image, in its quest to be a superpower, like the US has, right? Is that what it's trying to do? And I haven't made up my mind yet, because I think we've got a long way to go. But I think it's worth considering that China is reshaping the world to benefit itself, just like the US did in the post-World War II era. But one of the things that's really, it's a stat that I was surprised by, 74% of the world's population now lives in some kind of autocratic regime or under authoritarianism. And that has happened in the last 25 years. I can send you the survey. I know you look skeptical.
Did you just put India in there?
Sorry. So yes, I shouldn't have done that. But when you think about it, right? Like maybe that's the outcome of this era of trade and doing transactional business. That what is lost in the process isn't necessarily the ability for companies to make profit or for stock prices to go up, because we keep seeing that happen. But what is lost in the process is that esoteric concept of liberal democracy. And maybe that's not such a terrible thing if authoritarian, and I'm being provocative deliberately, but maybe a benevolent authoritarianism can raise governance and improve living standards. I mean, if that's how we want to judge
I have to cut you off there. Sorry.
societies, maybe that's where we're headed, right?
All right. Well, I think I saw a question there.
Sure. Maybe just a quick comment and a question. So I guess starting on this perspective of China. By the way, my name's Andrew Fennell. I work for Citibank.
Hey, Andrew.
Oh yeah.
Hello.
Hey.
Hi, everybody. So just looking at the broad strokes, you had real GDP growth of 5%, but 1.5 percentage points of that was driven by net exports. Nominal exports growing at about 5%, but really China didn't import at all last year. And if you kind of take into account a deflator of 1%, domestic demand grew at something like 2.5% in nominal terms. So that doesn't really strike me as an economy that is growing very dynamically at the moment. And if we move, kind of getting to the question here for the trade outlook for 2026, I guess the question I have in my mind is we had a very disruptive last year. As you mentioned, Taimur, didn't really impact because of the whole AI cycle, the export momentum we saw in China and around the rest of the region. But things have kind of settled into a new steady state. And I think one open question I have in my mind, both for China and the region, is, I think in China, people are still expecting net export to be a key driver of growth, and for that to get them sort of to the close to around 5% that the authorities are aiming for, and then is that realistic in your view? And then the follow-up question to that is really sort of how does that affect how we view trade for the rest of this region for 2026 and perhaps for the next 2 years or so? So there's a lot to unpack there. So feel to cherry pick whatever you think is most convenient to answer.
Right. So to me, the Chinese GDP, like Indonesian GDP, and to some extent the Indian GDP, are all made up numbers. So don't really pay a lot of attention to any of those three numbers. But we have a lot of additional data which can tell us about the Chinese economy. So if we look at the balance sheet of Chinese households, it's getting worse. They are more indebted. And if we look at Chinese corporates, they haven't managed to deleverage as much as they would have wanted to. And of course, the public sector balance sheet is getting bloated. So from that perspective, if we just analyze an economy without necessarily paying attention to what the top line GDP is from a balance sheet number, it does not look like a very happy situation. Now, juxtapose that with what I call is the elixir of growth, which is a country innovating? Is it moving up the value chain? And is it creating brands and value additions that are of world-class quality? And the answer to all of those four questions is emphatic yes. China, I mean, I said earlier that, a bunch of countries in Southeast Asia are going through a golden age of investment. China is going through an never seen before spurt of innovation. The innovative energy in right now that is being unleashed by China will inform sort of the global zeitgeist of investment for decades to come, whether it is on the green economy, which, by the way, is now accounting for 10% of China's GDP and climbing, and 26% of China's exports and climbing. It's not stuff that anybody else is making in a very profitable manner. And I think the world is eager to have an EV transition. The world is eager to have a green transition, and China is sort of underwriting that. So to me, that part of the export story remains very bright. Secondly, in terms of the sort of the non-tech related innovation, whether it is China's e-commerce economy or China's service economy. My colleagues in Hong Kong now say, now that they have the high-speed train link between Hong Kong and Shenzhen, that a massage in Hong Kong, in Shenzhen, is half the price and double the quality. So it's nicer and fancier and cheaper. So it's a 4 times value proposition. It's not just that cheap stuff that you can get in Shenzhen. Look at the value proposition that BYD is giving in Singapore, that they will do end-to-end from trade-in to valuation to financing to giving you the car to creating a lifestyle store so that your brand stickiness begins. Again, tells me that the dynamism of China is spilling beyond just making a lot of stuff, cheap stuff, but increasing the brand quality, right? This is what Ricardo Hausmann calls the dark matter of trade, that when you actually start making stuff that people will pay a markup for, when you start making stuff where people will pay for the brand value, is when you really are heading into the game that the Americans have played so successfully, right? Americans make a lot of stuff that the whole world falls over each other to buy. Look at the iPhone, the markup around that, or look at a wide range of American products that people really want to pay because the brand is so powerful. So when I see that part, the improving brand aspect of Chinese corporate sector, when I see the pipeline of new innovation, I get pretty excited, not dismissing the property market bust, not dismissing the household leverage issue, not dismissing the sort of the weak multiplier. The spending that the government doesn't seem to have a lot of oomph. It kind of, again, reveals an economy that may not be that dynamic. I fully agree with that point. But I draw a parallel between what I just described and what was happening in the US in the aftermath of the global financial crisis. American households and American corporate sector went on a 12-year deleveraging cycle after the GFC. It was very painful, very damaging, and despite zero interest rate policy and massive fiscal impulse, the Obama administration didn't manage to raise US growth to above 2% for those 8 years. But what was going on in the US at that time? The stock market was going through the roof. Again, you could argue that the zero interest rate policy may not have been the best thing to do, but it certainly helped offset the drag coming from the deleveraging cycle because of the property bust. China, in the initial 5 years after the property bust, did not have that at all. Everything was falling. Property prices were falling, stock market price was falling, everything was net. Now, over the last 18 months, we have almost like a US type offset. You have Chinese entrepreneurs who are 25 years old covering being featured on the cover of magazines. You now hear the West talk about China's Genius program and how graduates out of the Genius program are now basically leading the top tech companies in China. It adds an excitement. It creates a zeitgeist that is very, very useful when you have all the other bad stuff going on. So this is why I see the pluses and minuses netting out. When I see top line earnings of companies in China, and when I see overseas companies' performance in China, it comes across to me as an economy which is growing at about 4 or 5% nominal terms, maybe 3% real terms, for what it's worth. That's my view.
Anything? All right. Anyone else got a question or last question? I'm being signaled to by Cheryl that we're bumping up against time. Anybody else? Oh, Gabby, and then Gabby, please.
Hi there, Gabby Rush, New Zealand High Commissioner here. I just feel the need, I mean, we spent a lot of time talking about China and the US and impacts, and there was a question that was sort of leaning towards sort of middle powers and what was the institutional way. But I guess for the record, we should reflect on the fact that certainly the Prime Minister here and Prime Ministers of other ambassadors in the room have been calling for dialogues, and there is conversation underway, and it is to do with blocks that already exist with a treaty basis, and whether it's the EU as a bloc talking to CPTPP, talking to ASEAN, that in fact these have been called for since Tariff Day last year. And in fact, there's a lot of conversation going on. It's been shared publicly. So for those of us from sort of smaller and middle powers, it's easy to sit and listen to a dialogue like this, and again to feel as though our interests are invisible and the work that we're trying to do is not being noticed. But in fact, it's very, very much alive.
Yeah. Do you want to have a? We could take it in one go, right?
Hi, it's Frank Dabberts of PwC Customs and Trade Consulting. I have maybe a slightly different question, and it's a concern that or maybe a concern that I haven't heard talk about a lot. And you know the phrase where they're saying countries that are getting old before they're getting rich. And just to put it in context, right, I was kind of comparing my parents. I'm from the Netherlands originally. My parents are in their late 80s. They're getting various levels of care, a bit of a pension. They don't look to me for anything. They don't want it. They don't need it. My wife, local, her parents, like so many parents here, their plan is always to rely on the next generation. And so if you look forward, right, and we talk about lack of consumption, etc., and higher saving rates, I'm just thinking, like, is there is just that underlying level of uncertainty. People are living longer, younger people are living longer, have to prepare for the future, they have to do that by themselves. And so if you look around the region, Singapore is trying, right? So the recent notification of the IPs, etc., is all looking 20, 30 years ahead. But China, Thailand, Vietnam, Indonesia, I don't hear anything. I don't think they're even trying. So do you see that is a big risk, like of not now, but like 20, 30 years ahead? Because you hear a lot of discussion about, well, Europe, it has been, but it's comfortable. Not because it's invested in a future where the younger and the older generations are comfortable. But even in Singapore, but certainly around the region, people seem very worried. And if that reduces their ability or willingness to spend, are we just in a situation where consumption can't go up, and then countries will continue to focus on export and that part of the economy?
Okay, thanks, Frank. So two very different questions. Frank on changing the demographics, and Gabby on middle powers. Let's take it in reverse order. Let's address Frank's question first on demographics. Taimur, you want to, and then
Sure.
Yeah.
There's a terrific book. I think it came out about 5 years ago. Charles Goodhart and Mahmoud Pradhan's book called Great Demographic Reversal. And they sort of look at 7, 8 stylized facts that we typically associate with aging. One is that a country that has a demographic cliff will start seeing a weakness in consumption, deflationary risk, fiscal risk, because you have to spend more money for the elderly, and perhaps some degree of very conservative policies, because the longer age cohort would keep on voting for policies to stay. You don't want to raise pension age and that sort of stuff. One of the corollaries out of the book is that you could have a situation in an aging society where you have a shrinking labor force, resistance toward immigration, and therefore an inflation spurt. Now, if that thesis is correct, it'll be fantastic for China because China is flirting with the disaster of the opposite, which is the deflation risk, right? Um, it's one of those things where the only concrete example that we have of what happens to a wealthy society that ages very rapidly is Japan. And we don't have any example of a poor society that ages rapidly because they're ongoing right now. Uh, one thing that I remember, I was giving a talk at USC in LA a couple of years ago, and there were 4 Chinese students in the classroom. My God, they were so bright. These 18, 19-year-old kids, just unbelievably bright. But they were shy. So they didn't ask me any questions when I was talking about, and I was talking about exactly this issue, that China is looking at a demographic cliff. And it's not just China. We have a bunch of even poorer countries in Southeast Asia, which are aging quite dramatically. And they came to see me after the class was over because they weren't keen on speaking in public. And they said that, why didn't you touch on the issue of automation? Our country, China, it has the greatest robot density in the world. And by the time we become old, we will have an army of robots taking care of us, and it's not going to be a problem. So I said, but who's going to pay for all that? And their point was that the cost curve will go down so much, those robots will cost $50. Tremendously optimistic angle. I'd never thought of that because I have been sort of mired into the old school classical economics way of thinking about aging, which is that an aging society that is not rich will face major problems with fiscal sustainability, will face deflationary risks, and would have social problems. Maybe my mindset is too narrow, and maybe I've sort of missed out on the robots saving the world, not destroying the world narrative. But it's interesting, right, that these young kids from China already have an answer to what their society would do when aging becomes unbearable. But you see a little bit of, besides robots, how things play out in Japan. Imagine going to a hotel in Japan 20 years ago. You would not dream of seeing a non-Japanese person behind the desk. Look at the number of Nepalese and Filipinos that are working in Japan, right? When it's super necessary, all of a sudden, a lot of xenophobia just go away. Korea's agriculture sector is another example. You have Bangladeshis learning Korean and moving to Korea, working on the farms on work or visa. So I think that if indeed robots don't save the day, open minds about other countries which have favorable demographic and bring them in would save the day. For every rapidly aging society in Southeast Asia, we also have really, really favorably demographically inclined societies, right? Philippines is one, Indonesia is one. India, time is running out, another 25 years, but for the next 25 years, remains pretty young.
Thanks, Taimur.
Yeah, no, I think the immigration piece is something we didn't get a chance to talk about much, but very prevalent and prominent in Japan. And Gabby, thank you so much for raising the middle powers. It is something that I write about a lot, and I feel that by focusing simply on the US and China, as perhaps we have inadvertently done in this discussion, by the nature of their geopolitical heft and economic size, we risk taking away agency from these countries. And, from the Canadian Prime Minister to the Singaporean Prime Minister and Senior Minister Lee, who have all talked about the fact that there is an opportunity to work together. But at the same time, I think in some ways, they are bemoaning the loss of a world that they have known to be so stable and so beneficial. And in that rupture/transition, the more that we can see these kinds of incentives for these countries to come together, the more I sort of heartily applaud it. The cynic in me says, where's the market? Where are they going to sell to? When the US closes off, or you can't really sell to China right now because of consumption issues there, where are they can make all this stuff, they can trade, and but where are they going to sell the things they need to sell in order to create jobs for the people in those countries? But I wholeheartedly applaud and support this initiative because I think the world really needs it right now.
Yeah, and Debbie's most recent article, I mean, it addressed 4 areas to look for in the year ahead. One is what Trump does, obvious what China does, and what other countries do. She phrased it in 2 questions, but essentially, it's a question that's going to I'll be discussing it in a series of meetings in a week ahead. So they want to sort of address it squarely, but it's a very relevant question. What do countries that keep calling themselves like-minded doing about it? that's a question that I've posed to my own country's leaders. But something you said, maybe just to close off earlier about the Bretton Woods institutions and your faith in them. At the WTO, obviously, they're grappling with an unprecedented questions about how to move forward. A lot of it has to do with, I mean, the birth of the WTO came about because of the death of the ITO. And the death of the ITO came about because the US didn't like the idea. Why? Because of sovereign power. And at the IMF today, as you know, there is an intense debate going on at the GRQ about the 15% bright line. Because if the distribution of quotas at the IMF were to reflect what the world really looks like today, the country that holds the minority controlling shareholder of the IMF would no longer be the minority controlling shareholder. It would have to include somebody else. So somewhere in that convergence is the yin that I see from Karishma contrasting with the yang that you're talking about, and where the middle powers will have to navigate. So any final questions before we bring this to a close? If there's none, then thank you very much, Karishma. Thank you very much,
Thank you.
Taimur.
It's been delightful.